So welcome back traders to another exciting video. Today I'll be sharing with you guys how to trade the trend line strategy. So we're going to be checking out some example. We are currently on US oil and this is the trend line strategy. So we are using the 4-hour time frame. The first thing you want to be doing when you come to your charts is to identify the trend of the market. Is the market moving down, up or sideways? So in this case, the market is moving down. Price is making lower highs and lower low. So we'll mark out our trend line like this. And as you can see, price has been trading below the trend line. Price is not breaking above the trend line. So this is our trend line we have drawn. So after you have drawn your trend line, what you need to be doing is you need to be waiting for price to come back close to the trend line. And this once price start getting close to the trend line, that's when you need to be selling the market. As you can see, on multiple occasions, start from here. Once price come close to the trend line, price rally down. Price came back again, rally down. So all you need to do once you plot out your trend line, remember you must use a higher time frame. Either use a 4-hour time frame or your daily time frame. But I would recommend using the 4-hour time frame because it's not too fast and it's not too slow. So all we need to do right now is to play the waiting game for price to come back close to the trend line so that we can look for a selling opportunity again. So wait for price to come back to the trend line, sell here, stop loss above the trend line for a continuation down, because remember the trend is down. So we're only looking for selling opportunity. The only time our buyers will change, we'll start looking for buying opportunity, is when price break above this trend line. Once we have a strong 4-hour candle break this trend line and close strong above, that's the only time the trend will be changing from being bearish to being bullish. So as long as we don't have a strong candle close above the trend line, we are still sell buyers. We are still looking for selling opportunity. So this is the first example on US oil. Let's check the second example. And okay, let me share with you how you can enter this. You can take your sales like this. You can set a sell limit, or if you are going to be on your chart, you can wait for it and take your sell once price gets close to the level, close to the trend line. So you can place your sell order like this, slightly at the level, so that once price gets to that level, price will trigger you in with momentum and you are good to go. So this is how you set your trading, your sales. Once price gets to the level, you sell, price continue rally down. So this is the first example on US oil. Let's check on the second example. So our second example is on Euro USD, and this is the opposite. This is an uptrend. First example was a downtrend, so this is an uptrend. And if you remember, the first thing you want to be doing is marking out your trend line. Identifying the trend of the market. Is the market trending up, down or sideways? On this case, the market is moving up, so we'll plot out our trend line like this. You want to account for as many weak rejections as possible. So we have marked out our trend line. As you can see, whenever price get to the trend line, price reverse. Price don't close strong below. This is just a weak rejection. Price do not close below. As you can see, this is a strong bullish candle once price get close to the trend line. So all we need to do, if you are going to be trading the trend line strategy, you need to just wait for price to come back down to the trend line, so that you get once price get to the trend line, you can use the scaling down technique. Use a 30 minutes or 15 minutes time frame to get early signs of weak rejections like this. 1 or 2 weak rejection is okay. Just take the buy, place your stop loss below the level, something like this. So you take your buys like this. Once given the evidence, you place your buy, stop loss below the level, below the trend line. Because if price is going to continue up, there's no reason for price to break that trend line, because once price break this trend line and close strong, the market will be reversing. So our stop loss is in a safe position as long as price will respect the trend line. So this is how you set your trades for a continuation up. So these are the two examples in the trendline strategy. And if you have any question, drop it in the comment section below. See you next time.